Hello and welcome back to CoinDesk Live. We're bringing you sessions from CoinDesk's policy and regulation event in Washington, D.C. Now, we got off to an incredible start this morning. If you weren't able to watch those sessions live, you can head on over to our social accounts to watch the recordings. We heard from SEC Commissioner Hester Peirce, Comptroller of the Currency Jonathan Gould, Representatives Tom Emmer and Richie Torres, and Senator Cynthia Lummis and Kirsten Gillibrand. If you go back and watch that session, you'll even hear attendees singing Senator Lummis happy birthday. Now, one thing I will say about the sessions this morning is that they were all very optimistic on the future of crypto in the United States, and they were all very productive when it came to bringing folks from both sides of the aisle together to have conversations on how to bring innovation back to U.S. shores. Now, this morning, I had the chance to catch up with journalist Eleanor Terrett, who's been covering crypto regulation over the years, and we agreed that while so much progress has been made when it comes to crypto regulation and policy this year, there is still so much to figure out, and this event is just one step in the right direction. If you're joining us now, CoinDesk's policy and regulation event is primarily a closed door event. So it's kind of special that you get to look into these sessions. Here, the private and public sectors have a chance to meet and advance the conversations around crypto standards and reform. For the duration of this live stream, you're going to get to listen in to some of those sessions. Like I mentioned before, we're going to hear from Congressman French Hill, Counselor to the Secretary on Digital Assets at the U.S. Department of the Treasury, Tyler Williams, former CFTC Chairman Rostin Behnam, and former CFTC Commissioner Summer Mersinger. We are also going to hear from the new Executive Director of the President's Council of Advisors for Digital Assets at the White House, Patrick Witt. Now, I stand to be corrected here, but I think that this is one of the first times we are going to hear from Patrick Witt since his predecessor, Bo Hines, joined Tether. So I would stick around and wait for that. Can't wait to hear what he has to say when it comes to digital assets in the United States. Now, as I mentioned, today is all about collaboration, bringing compliance officers, regulatory executives, general counsels, policymakers, and regulators together to drive crypto legislation and regulation forward in the United States. Now, you at home might be wondering why these conversations in DC matter to you. And I would say the simple answer here is that the decisions made from these conversations are going to directly shape the future of money and innovation. Everything from investments to banking, how you pay for things, how you build wealth over the next decade are all going to be informed by these conversations. So even if you're just getting into the industry, if you're an investor, if you haven't really used crypto yet, I think it's important for you to understand what's going on in DC. All right, let's get to our first session now. It's a congressional keynote with the chair of the House Financial Services Committee, Congressman French Hill.
Across the world, including here in Washington, D.C., at the U.S. state level, in the UK, EU, and Asia. I have the great honor of introducing the next congressional keynote, Chairman French Hill. Of course, he is the chairman of the very important House Financial Services Committee. He is the esteemed architect and sponsor of the Clarity Act, a comprehensive market structure legislation which passed the House in overwhelming bipartisan fashion. He has been a true champion and leader for industry in Congress, and the industry is so grateful for his leadership. To moderate this discussion is my good friend Alex Sternhill, the founder and principal of the Sternhill Group, and a true advocate for crypto in Washington, D.C. Please join me in welcoming Chairman French Hill and Alex Sternhill.
Back up a little bit.
Yeah, we don't want you to hurt yourself.
I think that's already happened.
Yeah, that's a good point.
Thank you so much. My initial remarks were going to be to talk about how great you are. G's already done that, so I'm going to continue to
You're
tell
both
people how great you are.
You're both invited to the visitation.
Absolutely. Thank you very much. It's both my privilege and pleasure to welcome and have Chairman French Hill join us from the great state of Arkansas as the chairman of the House Financial Services Committee. It's been amazing to watch you sort of going back 2 years ago, 3 years ago now, at sort of the beginning, your incredibly strong role inside the creation and passage on a bipartisan basis of FIT 21, and then taking the reins as chairman from Chair McHenry, and really turning that into, at least initially, a reality in the Genius Act, regulating stablecoins, and now an overwhelmingly bipartisan vote on the Clarity Act that came out of your committee. Love to get just sort of a quick sense of what happened between FIT 21 and the Clarity Act that you felt was so important as we've seen momentum build for the passage of a market structure bill.
Well, thanks, and thanks for having me today. It's great to be with everybody, and you've had some great speakers today. I know Cynthia Lama loves spending her birthday with you today, and so that's great. Well, you know, I think laying the groundwork here, I know the press talks about the role of politics in digital asset legislation and crypto, and I try to back away from that and say, look at the 5 years of work, intensive work, globally and in the United States, since Facebook's Libra project, or since the IMF's push for CBDCs, or since the FTX bankruptcy. You've got to really go back and look at the conditions then, and what you'll see in the House is, on a bipartisan basis, a lot of members in both political parties doing their homework about why we needed a regulatory framework to support innovation, support Web3, support the use of blockchain operating system applications, support the concept of a tokenized payment. All that emanated from that work. And so I want to put the emphasis there, because that's the leadership of Senators Gillibrand and Lummis. That's the leadership of Patrick McHenry, former Speaker McCarthy, to create that environment that members on both sides of the aisle feel like they can convene and put together legislation. It was really after we had done the stablecoin legislation that we got out of committee under Patrick's leadership, and then got FIT 21 across the House floor with a strong bipartisan vote, that you saw politics intervene. And so sure, post people voting on Staff Accounting Bulletin 121, Gary Gensler's policy on custody, the Emmer CBDC type bill, the committee vote on stables last Congress, and FIT 21, after that, people have a track record. We're for innovation, we're not for innovation, we're for rules. We think it's fine not to have rules and just operate under the Commission's enforcement regime. So I level set with that, first and foremost, because of the way it's often teed up, to me, to talk about how this has moved over the last 4 to 5 years. Transition from FIT 21 to Clarity is pretty straightforward. FIT 21 was praised. We worked hard on it. We got bipartisan consensus on it. But we also put it out for a lot of editorial comment from people in the marketplace of all different levels: innovators, exchanges, digital asset underwriters, existing market participants. We looked at what was going on in other countries. And so Clarity is just refining those base concepts under FIT 21. And I think it really reflects the broad consensus of how to do a market framework. I'm proud of it, because I worked with my colleagues to introduce it and pass it, and we got 78 Democratic votes with the Republicans to pass it and send it to the Senate. And that doesn't mean that we can't accept amendments and good ideas from our colleagues. And Tim Scott and his group and the Democrats are also all doing a good job trying to find consensus around market framework. Proud of that work. I'm simply saying that we debated all those same principles over the last couple of years, twice, in the development of FIT and the development of Clarity, and we landed at Clarity. Because we want to have that balance of creating a framework where you can have freedom to do digital assets and then expand from there as situations warrant, meaning we want some regulatory flexibility in that to attract capital from new innovation as well as traditional finance people who want to recognize the operating benefits of operating in a blockchain context. So that's really the backstory. And I think there's a lot to be proud of. I could not have done this without strong, active Democratic support in the House, like Josh Gottheimer, Richie Torres. I mean, to name, I shouldn't start naming them. You'll always leave somebody out. But those two really worked hard this spring and summer to find consensus, and we appreciate their work.
Well, thank you very much for that. I can only tell you that earlier here today, Richie Torres was here, and he credited you because never before this Congress had his name ever been attached to either the word genius or the word clarity. And he gives you a lot of credit for your bipartisan leadership for making that happen, as well as digital asset legislation. I know you've been working on this really hard, and we tend to lose sight of things. What happens if we don't pass a market structure bill?
Yeah, and this is good. And I know all of you probably from a very diverse set of backgrounds when it relates to digital assets. You're either in it or not in it, or you want in it, or you cover it from a journalistic point of view, or you're in a traditional finance arena and you're trying to see how this is going to apply to both business to business and consumer to consumer and business B2C as well, like in context. So, I relate to that, but I think that I said to President Trump one night when we were in the midst of going through the crypto week, I said, if you pass a stablecoin bill, that's like passing a bill authorizing the construction of a cell phone, but there are no cell towers. So you have a thing, it's a dollar-backed stable coin, it's useful, and under the laws of New York, I'm grateful for all the innovation that's promoted, and outside the US, you've got stable coin experimentation going quite vigorously in some places, right? So it's not, but in the US, from the standpoint of innovation, were you to authorize the use of a stable coin, it takes months to write the regulations to authorize it, you've got a cell phone, but no cell towers. You don't really have the full ecosystem around which to adequately use a dollar tokenized payment in an innovative context, at least in the concept of financial services. You need the rules for exchanges, for ATSs, for custodians, for banks, for issuance, for storage, for disclosure, for AML, BSA, and all of that, and that's embedded in that ecosystem approach. So I think it's essential. I mean, my pitch is, it's why I wanted to do them together. It's not because I think it's hard to vote on these topics. It's not. I think it just symbolically ties the fact that if you want to make this kind of major economic pivot and get it done right and get it done timely and synced up, that they are companions. And so I'm working and have great faith in my good friend Tim Scott, our chair of Senate Banking and leadership in the Senate, to adjudicate clarity in the right way over in the Senate, and let's get that passed before year end so that our supervisors and regulators and innovators can work together on the right kind of rule set. Does that make sense?
Yeah, no, absolutely. Let me dig a little deeper on that, because I think that's an important part. Despite all the great work that you did passing the Clarity Act with 78 votes on the floor of the House, that bill now heads to the Senate, colloquially known as a place where good legislation often goes to die.
He's a former Senate staffer.
I mean, I'm allowed to say those things.
This is
I've been there.
Stunning.
The brace I'm wearing, as you know, is I've been, sitting in the breach, in the breach, fighting for clarity to be put on the Senate on that Senate floor. But we don't have the baseline of education and support that the House, through multiple iterations in Congresses, on the Democratic side particularly, we've seen, and we've got obviously an urgency and a push to get this legislation done as possible. But what's your view on sort of the Senate Democratic? I know you know these folks well. The Senate Democratic view. They put out principles yesterday that were seemingly in a good place, but I'd love to get your high-level view on it. What do you think the prospects are of getting Democrats on board, not only a Senate product, but then taking that Senate product and working together with clarity to get to a final product?
Right. Well, I'm a congenital optimist from the way I was raised, and then I've had this is my third tour of duty in Washington in my career, and based on my experience as a Senate staffer and an executive branch official in President Bush 41's administration, I can read the tea leaves, and the tea leaves here are positive. The tea leaves here are positive. Democrats don't want to be labeled not for innovation and being pro-innovation. Democrats don't want to leave something just to be inadequately ruled by enforcement, random enforcement. They don't want everyone in public life is tired of the pendulum swinging back and forth between the two parties in the regulatory system, just as a general statement. If you're trying to run a business, maybe if you're a political analyst or something, maybe you revel in it, but most people are looking for statutory certainty. And I think my Democratic friends in the Senate are for statutory certainty. And I really appreciate the kind of an energy I've seen from someone who's a senior member, former governor, Senator Warner, serves on the Intelligence Committee, has been active on this issue behind the scenes. And then some of the young, new Democratic senators that we've sent over from the House, like Gallego and Kim and others. They've brought energy into this. And then there are senators who, just because of their geography and their state, are passionate about this. That's a different dynamic. So you're right that over this past 5 years, there's maybe a deeper engagement in the weeds around these topics among House members. But I wouldn't ever presume to think the Senate can't catch up and effectively lead. And you saw it, frankly, on Genius with Bill Hagerty's engagement as a Republican, working with, as I say, good members who've plowed this field for some time, like Senators Gillibrand and Lummis. So I'm optimistic. And we've really got the documentation. Whether it's in Senate Agriculture or in Senate Banking, we can provide help in every stretch of the way, from legal drafting to witnesses to analysis to use cases to whatever they need to be supportive of the work they're doing on a bipartisan basis. And we stand ready to provide that support.
That's fantastic. Let me just turn back quickly to the Genius Act, because it feels like it was a million years ago. It was just the other day that that bill was signed into law by the president. No bill is perfect, and compromises occurred.
Yeah.
We're in the implementation stage, obviously, at the Comptroller's Office and at Maine Treasury and elsewhere. Is there two things? Number one, is there anything you'd like to see differently in Genius going forward or potentially in the future? And then secondarily, how do you think, and I know you are not only you've been a practitioner prior to your life in Congress. How do you think stablecoins, how do you think stablecoins proliferate out in the industry? What are the benefits? What do you think that legislation actually builds a pathway for?
Yeah. Good questions. Let me start with, first of all, on Genius. I think my views are well known on what should have been, added to Genius. And we actually put those changes in writing for everybody to read transparently. They're in clarity. They're set aside as amendments that apply to Genius. And we discussed those at length with senators and Senate staff to know that was coming, and the administration, the Trump administration, to be constructive. No hiding here. We just thought these were ways to make Genius stronger and better based on the work we've done in the House. So I just invite you to go study those for yourself. And if anybody has questions, we're always open for business to talk about it. On stable coins as a business strategy, this is what I'm interested in this because I'm a financial technology person going back to the 70s, believe it or not, back when you innovated in a lot different ways than you do now. But I've always done that throughout my career. So I've been driven by this, not by Bitcoin or the white paper, but actually by writing applications on a blockchain to lower agency costs, increase accuracy, reduce fraud, make an analog system even more effective, decentralized decision-making in a programmable aspect of it. I'm just eaten up with up. I think that's the future. And so that's not, it's innovative. I wouldn't call it disruptive. It's like next step. You're going from VHS to streaming. People are going, what's VHS? What's that?
I remember.
So,
I remember.
I know you
yes,
do.
Yes.
But stable coins, dollar-backed stable coins, I think will be adopted in a blockchain application as a payment rail. I think you're seeing the innovation of an additional payment rail. And I've seen that exaggerated by people who are proponents, perhaps, or expanded into a realm that maybe goes beyond what I envision as sort of the initial use case, which is a payment rail. I'm going to debit cash, I'm going to credit my dollar-backed stable coin, and I'm going to do something with it. And if there's money left over, I'm going to debit stable coin and credit cash back into my cash spot. Probably FDIC insured, perhaps. Because the stablecoin is not FDIC insured, it does not pay interest, it's a payment. You're not using credit, you're not using debit, you're not using cash per se in an old school way, you're not writing a check, you're not sending a wire transfer. We've chosen to use a dollar-backed stablecoin for either a programmable benefit in a corporate treasury sense, particularly cross-border, or in a remittance sense, in a consumer-to-consumer sense, or we want 7-day settlement, 7-day action, peer-to-peer. So I'll stop there. I did 7 countries in 2 weeks in August, looking at stable coins outside the U.S., looking at digital asset regulation outside the U.S. With a group of members. A fascinating trip from Argentina, where you see abundant take on a dollar-backed stablecoin for obvious reasons. Since 1822, you've got not a particularly fiscally sound situation, all the way to going over to the EU and trying to be convinced that stablecoins are a horrible idea and that I need to step up and endorse a CBDC digital euro. So, I mean, I had the whole, I'd say A to Z view on stablecoin usage outside the U.S. I think it was very instructive to our work.
That's fantastic. I want to turn to a question about a broader agenda for you. Before I do, I want to ask a question that unfortunately I get asked regularly, and I generally just make it up. So I'm going to turn it to you. Okay. Because you have much better insight. The number one question that I think a lot of the asset managers out here want to know, what are your percentages, what are your probabilities about the passage of this Congress, a market structure bill?
Well, I'll just say I'm way over 50% because of the work by people in this room, by staff members and senators and House members who have collaborated on this now for 5 years. And we see on the horizon the elements of success. It's been helpful to have the Trump administration in place and their technical assistance. We've gotten great technical assistance from the SEC, the CFTC, and the Treasury, and as well as the bank supervisors, and that's been helpful. So you have an executive branch viewpoint, and then you have a House and Senate group that's committed to passage. So all we have, it's an opportunity that presents itself. So I give it a much better than 50% ability to get this completed. In this Congress is even easier than saying in this year.
That's fantastic. I think just to wrap up, I would just say one thing. You have a great reputation amongst your colleagues, but as a former Senate staffer, that's not really something I really look to. It's the people that work for you that continue to talk about not how great of a legislator you are, but also as great of a boss as you are. And for us, and for those of us that worked on the Hill, that's really the true hallmark of a great member. Thank you very much for being here. I can only tell you from the folks in this room, we are all well aware that digital asset legislation doesn't get done without your leadership. And we're excited about the next few months and beyond to get the rest of the agenda fulfilled.
Well, thanks for having me. And if I have some success in leadership in the legislative branch, I want to credit My first boss on Capitol in 1982, the Honorable John G. Tower, senior senator from Texas, who was the most senior member of the banking committee I got to work for 2 years. He was a great boss, a funny guy. He was 5'4" maybe. So when we'd walk down the hall together in the Russell building, he always insisted to be ahead of me. So I'm like, so that if you're walking, coming up on us, we look like we're the same height. But when he ran to replace LBJ in the Senate, there were like 32 candidates or something, open seat when LBJ became VP for Jack Kennedy. And he was just an economics professor at Midwestern University in Wichita Falls, Texas. And his mantra was, my name is Tower, and I don't. Thank you all very much.
We really appreciated that. So as you all know now, we did a little flip of the session. So we are now heading into the T3 collaboration on illicit finance, a topic that should be near and dear and a priority for all of us. I cannot wait to hear this story. Ladies and gentlemen, we are ready for the next panel as the stage is being set in real time. Come on up. Adrian Wall, I'm going to have you lead the charge.
You're like a little kid.
All right, I like that intro.
Amazing.
All right, everyone, how are we feeling today? Good?
Good.
Yeah, it's been so far so good. Welcome everyone to the panel. We are here to talk about the T3 Financial Crimes Unit. And I assume everyone knows what the T3 Financial Crimes Unit is. However, I just want to make sure we're all starting from the same place. So, Ari, could you do me a favor and explain to everybody here, what is T3FCU?
Yes, I do not assume that anyone knows what T3 is, and it really makes no sense. First of all, thank you, Tira and CoinDesk, and the walk-up music was just beyond. So T3 is a partnership between Tron, Tether, and TRM Labs, hence the T's. And one of my favorite new facts is that we just brought Binance in, which is going to rename and rebrand Tinance to make sure that it fits within the T3 partnership. You heard it here first. T-shirts are on their way. But essentially, T3 is a public-private collaboration to stop and mitigate illicit finance risk in the stablecoin Tether on the Tron blockchain. And that is really the full-time focus of it. And it sounds it's private-private collaboration. You have Tron, Tether, and TRM, right? But it's public in that we work really closely with global law enforcement entities. And we'll talk about that a little bit more in a moment, but think every US federal law enforcement agency all throughout APAC, Europe, and really the rest of the world. And the idea is that TRM brings tracing services and investigative services, anti-money laundering, to investigate cases side by side with law enforcement who can ultimately get assistance from Tether, who have a compliance team who are able to burn and reissue their asset when it involves illicit proceeds. So we'll get all deep into all of this, but think Tron, Tether, and TRM working really closely with law enforcement to go after bad actors to build a safer financial system.
Perfect, thanks, Ari. Dave, all the way down in the end, I want to kick it over to you. At this point, let's talk about some of the regulatory and enforcement context around T3FCU. Now that we know what it is, we're talking about a global organization that works across borders with various different types of law enforcement. What are the things that we have to take into account?
Yeah, hey everybody. So when we're thinking about how to sort of operationalize this from the Tron perspective, I drew upon my background as a federal prosecutor. I worked on, I led the cybercrime unit in the US Attorney's Office I worked in, and in that capacity would have to follow blockchain assets that were, for instance, part of like our ransomware investigations. And the challenge was always like going across borders, trying to get information. You're dealing with all sorts of different levels of capability in law enforcement all around the world. And so one of the challenges for us was really finding like a singular platform that all of these different law enforcement entities and regulators of different types of capability, right, different familiarity with blockchain and tracing, and find like a one-size-fits-all solution that would effectively sort of democratize blockchain tracing. And the solution that we found was to go with a partner like TRM, right, which had the experience and infrastructure that was set up to allow us to intake from different law enforcement agencies, crossing borders and all of that with different competence levels, and really then bring to bear the blockchain tracing capability and have clear guidelines so that it was known to law enforcement. These are the types of things we can look at, right? Like we're looking for money laundering, we're looking for terror financing, we're looking for nation state action, and really make it clear these are the sort of size and type of illicit activity that we can go after.
Perfect, I love it. And that's a great segue into the operational kind of side of this thing and what the implications are around that. John, let me ask you, my understanding is that Tron spearheaded the creation of T3FCU to enhance protections around stablecoin usage. Could you walk us through why Tron took the lead and how that leadership has sort of shaped the initiative's impact so far? How has it advanced industry-wide cooperation?
Yeah, so Tron has really become a leading settlement layer for stablecoin transfer volume. And Tether is a big part of that. There's currently upwards of $80 billion worth of USTD circulating on Tron. And what we've seen is of that volume, many of these transactions are for relatively smaller amounts, which really denotes use for everyday retail purposes, particularly in emerging markets and in communities that are underbanked. And so that's a phenomenal thing. I think for us, that's a realization of what we kind of hope for in terms of the utility of blockchain. But it's also presented this responsibility and that we have to be great stewards of what we've created, right? Because with any great technology, bad actors will attempt to misappropriate it. And so I think for us, the question has always been, as a decentrally governed, permissionless layer one, what is our responsibility? And I don't think we have the benefit really of a playbook to necessarily navigate that or tell us directly what that equates to. One thing that I can really say is I have to give the founders of Tron a lot of credit because they have acknowledged that we can't do it in and of ourselves. And so we've brought in our partners to the table, to really be collaborators in making sure that we create an environment where we have online transactions that are done with integrity, right? So law enforcement, global law enforcement is a big part of that. Working with our compliance personnel, different off-ramps, Binance being a great example of that. And so I think because of that, as adoption of the platform continues to grow, of the protocol continues to grow, we really want to make sure that the integrity of this online activity continues to grow as well.
Just real quick, before we even get any further, I'm very big on sort of show, don't tell. So I want to put some numbers on this, right? We announced about a month ago that this has been operational for about a year. We've seized back or worked with law enforcement to seize back over 250 million in illicit proceeds. We've seen a whole, you talk about the spectrum of different illicit activities. Money laundering as a service has been number one, but we've also dealt with North Korean hacks. I think the T3 Financial Crime Unit is the largest seizer, if you will, with law enforcement of the Bybit hacked funds. We're talking about ransomware, we're talking about terrorist financing. So there's, and that's true of US law enforcement. We've worked closely with Spanish authorities famously in a case. So I'd say there's been a lot of successes to date. I think there's a lot more to be done. As we know, 250 million is a wonderful start, but still a drop in the bucket when we talk about overall illicit activity. But really, really important start, and I think we're moving really quickly.
And just one other thing, I think we've also seen a corresponding reduction in what's been assessed as illicit activity on the Tron blockchain. And I think it's as a result of initiatives like this, I think perhaps primarily as a result of initiatives like this, that we're sort of driving down criminal activity on the chain.
Yeah, I mean, one of the coolest things that you see out there in the work that we do, which is a lot of us, is we're undercover. We have folks communicating in password-protected Telegram channels with terrorist financiers and others, is to see, hey, Tether's been taking action against funds. They've been freezing, they've been burning, they've been reissuing. Let's move to this other stablecoin, or let's move off of Tron to a different blockchain. I mean, those are huge wins, and that's like, that means more to me than the numbers I see out there in terms of seizure.
Ari, could you talk a bit more about the strategies that you guys are using specifically when you're talking about combating illicit finance?
Yeah, I think, look, it's a whole host of different approaches, and it's a whole of government and global law enforcement approach. One thing for this group, right, which is focused all the time on policy issues, how we're engaging on Capitol Hill and elsewhere, look, public-private partnerships are absolutely critical, right? Crypto and the native qualities of public blockchains allow us to do anti-money laundering, illicit finance investigation better than we've ever done it before. And when we talk about public-private partnerships like T3, about 2 weeks ago, TRM launched the Beacon Network, which is basically 75% of crypto volume. We're talking about Coinbase, Binance, OKX, Kraken, blockchain.com, Robinhood, PayPal, all coming together to work with law enforcement agencies to interdict illicit proceeds. So like public-private partnerships are the answer to a lot of the issues that policymakers or questions policymakers are asking right now when it comes to AML, and it's great to see the industry sort of leading in this way.
All right, perfect. Aaron, let me bring it to you. As somebody from Binance, now that Binance is part of this incredible organization, on the front lines of investigations, right? Could you share what's involved in, as far as these investigations are concerned, the time it takes, what's involved in the discovery process, the work required, the parties involved, and how you bring it all together?
Yeah, absolutely. And I think, for Binance, it was, excuse me, joining T3 was an obvious sort of win and an obvious sort of yes. I think at Binance, we're extremely proud of the team we've built, the investigations team we've built, investigators from literally all around the world, a variety of backgrounds, including law enforcement, other, compliance units, technology companies. And I think one of the things that we've learned over time is that you really have to invest in building relationships and in building sort of solutions and the technology that you use, the investigative tool sets that you have. We partner obviously with TRM, and our investigators also put a lot of time into developing relationships with law enforcement, with other private entities, with other kind of intelligence partners. And I think, when you combine all of that together and have a forum where you can really leverage that, that's where you see really, really dramatic results. Obviously you want to start out and make sure you cover all your bases and, do everything that you've got to do. But then when you have that kind of space to really start to, I don't want to say innovate, but sort of really like have the time and the resources to dedicate towards proactive investigations work, I think that's where we see some really, really dramatic wins. And crypto is always innovating. Our investigation should always be innovating. And that's what this T3 partnership allows, is it really, we've already had some really great sort of back and forth kind of, discussing potential solutions for some tricky sort of investigative issues that we never would have been able to solve on our own. And that's where we really see the benefit of this.
Perfect. David, I saw you nodding your head. Anything to add to that?
No, it's just like, we see it, right? Like, I'm sort of situated at a point where I see a lot of the communications happening, and it's, I don't know. Again, I think back to this time, we'll call it like 2019, and we're trying to follow crypto around the world, and things would keep slipping through our fingers because you have to cross a border, and you didn't really have buy-in, and there was a lot of distrust in the industry. And to see it coming together in this way for what I think is a really good objective here, and people not only achieving results, but collaborating and strategizing and innovating in a way to like bring about even better results, I think is a really good thing. And hopefully, I think a model for the industry.
100%. And you mentioned earlier about that significant drop in illicit traffic on Tron's blockchain. John, let me follow up on that. As far as you've seen on the on the Tron blockchain, so what are the biggest areas of illicit activity that you've encountered so far? Where is that drop coming from?
Yeah, I mean, one thing that I think we're really proud of was recovery of funds in relation to the Bybit hack. And I think it was, you can give the current tally, I think it was 9 million or something around there. So I mean, very significant. But I think for us, top of mind, anytime there's funds that are associated that are stolen with a hack, I think that's something we want to prevent. Bybit is a definite win because it also sends a clear signal to state-sponsored actors that, even if they are somehow successful in accessing these funds, that there will be no off-ramp, there will be no out. And so I think that's certainly top of mind.
I mean, it's incredible that T3 has been able to achieve so much considering how many different types of organizations it has to work across. So actually, Ari, if I can ask you this question, how do you do it?
Yeah, look, I mean, just to be purely operational here for a moment, the way this works is that in a couple different ways. Either we get a case from law enforcement, right? They're investigating illicit activity that's occurring in Tether on Tron, and they'll reach out to T3. Oftentimes it'll be like, hey, are you seeing what we're seeing here? And in that case, it's probably an investigator at TRM, and they'll have this conversation, and then they'll say, all right, what is the next step? Well, we know these illicit proceeds are, this is how we explain this happening. Maybe they provide legal process to Tether, who ultimately can freeze, burn, and in the best case scenario, ultimately reissue those funds to victims or to victim compensation funds. So what you have here is you have either cases originating with law enforcement, maybe cases are originating from TRM's investigation team or Tether's compliance team, or now with Binance. And I mean, I'll let Aaron sort of speak to this, but the resource, you're dealing with really extraordinary resources from Binance's compliance team. But what I think it really does is round out the way T3 works, right? You have an analytics provider, an investigative firm like TRM. You have a stablecoin issuer like Tether. Obviously, Tron is the infrastructure, the blockchain. But really, it comes down to, hey, can Binance block these funds, or can Binance work with law enforcement to seize these funds if they're hitting the exchange?
Yeah, and I think one of the things we've really seen is, Binance is by no means the only exchange that does this, but I think we've really set ourselves apart in terms of the level of engagement and the effort we go to engage with law enforcement. We really see that come back then when it comes to these sorts of cases, right? Whether the higher the general level of education around blockchain analytics, cryptocurrency in general, the more rich the referrals are for these sorts of cases, and the kind of more ground we see for potential collaboration across jurisdictions with other private partners. I think we're really starting to see that there's a real appetite to take these cases on and kind of work them to completion.
And when we talk about this operational model, I mean, to me, this is absolutely a model for what anti-money laundering could look like in the crypto space. And it can't look like this in traditional finance, right? You see consortiums of banks that are working together, but it's static. What we're able to do is share information in real time because of the nature of blockchain transactions, and alert Binance or other exchanges to ensure that they are stopping those funds from hitting their platforms. And to bring it back to this group from a policy perspective, if I'm sure everyone here has read the various discussion drafts of the Senate market structure bill, both have robust sections on what public-private partnerships can look like in the anti-money laundering space, and we built it, right? We can now show that, hey, this is not only just a great idea on paper in a draft, but this is something that's actually happening in the real world, and it's an only in crypto kind of story. We can only do this because transactions are occurring in real time on an open public ledger.
So you mentioned the public and private, kind of the evolution and how that's becoming more robust. Dave, let me ask you on that point, how do you think this is fitting on a kind of regulatory on a worldwide scale as things develop from, on a public or from a government side?
Yeah, I mentioned earlier the sort of democratization of this sort of interdiction work. And, what we've seen is from sort of your local, sheriff who may be doing an investigation. Well, now they've got an opportunity where we're providing a lot of the tracing infrastructure through our partners at TRM to really build out these transactions, do a little bit like what IC3 does for the FBI, right? Match it up to ongoing investigations, and maybe this one person who's been ripped off for their life savings and in any one instance wouldn't sort of move the needle for law enforcement is actually part of a much larger and well-known consortium, and that might be the evidence that we need to then go in and actually then go to Tether with our lines of communication that we have with Tether to freeze those funds. I think the message that sends to the regulatory world, right, is that, well, this is a project that is, private in conception, but has this real public-facing invitation. We want to help you. We want to help you get better at this. We want to stop the flow of these assets on here. And what it, I think, buys, right, is some goodwill, right, among regulators who have to consider, well, how much leeway do you allow this industry to have? And frankly, there's been skepticism about the players in this industry for a long time. Well, we're trying to address that. We're trying to address that by having a real impact on people like that person in rural wherever who, unfortunately was fleeced out of their life savings, and we can actually get that money back. I think that's a powerful message to take to regulators, and I think that gives us space to then innovate in our industry because they know that there are responsible actors who are minding the store.
And I think the numbers speak for themselves, and that's the kind of message that we should be bringing to Capitol Hill, right? This is doing some real good, real quality impact in an area that we desperately needed. So you talked about the public side. Erin, let me ask you about the private side. There's a flip side to all this in that the more sophisticated and the better TR or T3 FCU gets, I suspect the bad actors will catch up and find ways to sort of compete. Where do you see this going in the next 3 to 5 years?
Yeah, it's really interesting. Obviously, we see all types of cases at Binance. I think, one thing we've really seen is as crypto expands and becomes, the usage of crypto becomes more widespread, which is obviously something we all are working towards and are proponents of. I think we do see, we continue to see sort of low level, obviously any sort of crime is something that we need to address, but sort of low level routine kind of crimes that you could or couldn't use cryptocurrency for. It's just cryptocurrency is now the convenient sort of means of payment for these sorts of crimes. But we do continue to see the development of a specific subset of very sophisticated actors in this space. And I think we really see as the space evolves, as the technology evolves, these actors are keeping pace with that. And it's something that we continually have to address. I think we have some great, where we can continue to sort of try and keep pace is sort of what we've already addressed with the partnerships and the knowledge sharing and then the technology and the tools, right? We've seen all of our private sector kind of technology partners continue to really push and innovate in terms of the solutions they offer and the coverage they offer, keeping on top of, different blockchains and tokens and, some really kind of interesting advancements in kind of labeling and attribution and all that technical stuff. And then also with the partnerships, again, I think a few years ago, there were lots of actors in this, or investigators in this space having conversations between each other informally about what they're seeing or, working on one-off cases together. But really what we've continued to see is the development of these formal partnerships that really allow us to share information in a way that respects data privacy and our customers' rights, but also really allows us to address these sophisticated bad actors in a way that we weren't able to do before.
I would just add, I think it's an awesome answer. And this whole game is about speed, right? Bad guys are getting faster and faster. In the Bybit hack, we saw funds laundered from Ethereum to Bitcoin in the first 72 hours after the hack, right? We had never seen that before. We'd never seen that much liquidity in the space in order for them to be able to move that quickly. But to Erin's point, it's like we're also building tools to move faster, to trace through mixers and in privacy coins and cross blockchains. And it is this cat and mouse game ultimately, but that's always been true. And I think what crypto allows for is this just whole other kind of public-private partnerships. Like public-private partnerships before, it's almost like this throwaway recommendation that you put in some response to government, right? Hey, let's have a public-private partnership about it. Let's do an ISAC. And they've always been static, right? It's like, how can we collaborate on this? In crypto, it's real-time information sharing for interdiction, right? Like, hey, we can now move faster. We can alert Binance exchanges across the ecosystem that funds are heading their way so they can ultimately block and work with government to seize them. So when I talk about these things, and as a purely practical matter, I know everyone in this room is going to be responding to Treasury's RFI on the Genius Act. I'll tell you, I mean, real-time information sharing and interdiction is will be my number one recommendation to encourage that across the ecosystem, because we can do it and we can do it way better and we don't need to be over-regulated in order to do it.
And if I could just, the other thing we provide is like a roadmap, right? Like a friendly roadmap. So you get outreach from law enforcement from somewhere in the world, and we've been like all over the world on this, right? We're getting requests in. Those investigators may not know, well, how do I do something at Tether? How do I bring this about? And that might have been a wall at some point where it was, I want to do something, but I don't know what we can do. So I think part of the service that's provided here is, okay, these are the steps you need to take. These are the things that you need, and here's how we can get this done. And by the way, we'll help you, right? And so just like providing, I think to Aaron's point about like communication and just like having some open lines of communication, not just internally among this team or the members of the T3, but like with the sort of global law enforcement community is pretty transformative and something that I don't think existed for a very long time on blockchain.
I'd ask a question to anyone on this panel, kind of following up on what everyone's just said. Where do you see, what are the key areas of illicit finance that I think this collaboration is going to try and target in the future?
I mean, I think one of the sort of typology that this group is really well positioned to address would be sort of large-scale organized activity, right? Obviously we, want to do everything we can to address individual cases, to your point about, scams or fraud, things like that. But I think, we're really concerned with actors who operate at scale and pose a threat to the ecosystem, in our view. And I think that's what this is ideally positioned to address.
Yeah, I was going to say really the same thing. I think that now, like it used to be that we're tracing the proceeds of this scam and it's this one-off. And those are really important cases. I mean, people have lost their life savings. We have to stop that from happening. But now we're able to use tools to identify networks and to understand, hey, that's not just one pig butchering case or investment scam. That's an entire network. And how are they laundering the proceeds of these giant scams? Through usually Chinese money laundering networks. Well, those networks are also laundering the funds for North Korea hackers, and they're also laundering the funds for cartels. So how can we use these tools? How can we use the authorities that law enforcement have to go take back those money, that money from those money laundering organizations? So I'd say it's absolutely, like, I couldn't agree with Aaron. I think it's not just T3. This is the future of sort of anti-money laundering and illicit finance more broadly.
On that point, Ari, if I could ask you, what is the one thing you think, if you could change about the way law enforcement, the industry and regulators sort of currently collaborate? What's the one thing you would ask them to do to improve?
Yeah, look, I think at the end of the day, it's like, when I look around every US federal law enforcement agency, FBI, IRS, DEA, Secret Service, and then even globally, there's a cadre of these sort of like crypto tracers, power users of blockchain analytics tools. We know them all. They know each other. They collaborate very nicely. But there are still really only a handful of these people with the tools and the training that they need to go after bad actors at scale. And if crypto is going to be what everyone in this room thinks it's going to be, right? Like it's going to be used by everyone all the time. We're going to need a lot more resources for law enforcement. And not just law enforcement, you talk about Genius, you talk about market structure. This all is going to be FinCEN, OFAC, regs. These are woefully under-resourced folks. So I would say that we're going to need resourcing, and we're going to need to figure out, because if we're moving into a digital world, we need experts to work on these cases.
Makes 100% sense. And sort of on that topic, as we reach the final minute of our panel, I'd just like to go down the panel and ask everyone in one sentence, what is the single most important thing that the industry should take into account the next 12 months, or that the industry should do in the next 12 months to strengthen anti-financial crime collaboration?
Oh boy, really put me on the spot. One sentence, is that it?
That's all we got time for, David.
So we're going to see enormous growth in this industry, in this country, and around the world. And in order to combat it, it's important to encourage information sharing. Funds move so quickly. I would love to see real commitment to breaking down some of the traditional barriers, maybe at borders, maybe in different agencies. We're starting to see it. We're starting to see it here in the US. I would like to see that continue around the globe.
That was my answer too. So I would just like to emphasize again, information sharing.
3 for 3? No. I would say that, but also I think just being proactive, really being proactive and reaching out. We don't have clarity in a lot of ways right now, right? It doesn't mean that we have, the ability to sit back and kind of watch this unfold. if there's something we can do in terms of collaborating to create kind of the protocols and the processes that we ideally want to see, maybe codified someday, I don't think there's much stopping us from doing it right now. So I would say continue to do so.
I think the industry is already answering the call from regulators and policymakers. We're doing a lot of the things that I think we're starting to see expected from them. I would say do things like work closely with T3, join the Beacon network if you're a VASP or DeFi protocol or bridge, and stop and interdict illicit proceeds.
Well, look, thank all of you so much for being on the panel. Thank you to CoinDesk for putting this together, and thank all of you guys for listening and giving us your time. Appreciate it.
Thank you.
Welcome back to CoinDesk Live. I have a note for the production crew. I want to hear the walk-up music next time. I hear all these panelists talking about the amazing walk-up music, and we don't get to hear it at home. I'm sure there are probably some legal reasons as to why we can't broadcast that, but if we can make it happen, I'd love to hear it just once. All right, I'm Jen Sanasi, bringing you special sessions from our policy and regulation event in Washington, D.C., so you all can enjoy some of the sessions at home. Joining us remotely now to share their views on this year's policy progress are two spectacular guests. Chris Perkins, the president and managing partner at CoinFund, and a member of the CFTC's Global Markets Advisory Committee, joins us, along with Hermine Wong, a lecturer at Berkeley School of Law and former special counsel at the SEC. Hello to you both.
Hi.
Hi, Jen.
All
Thanks
right.
for having us.
Thank you for being here. Today's been all about crypto regulation and policy and the progress that we've made this year. Hermine, I'm going to kick it to you first. Talk to me about what you make of the SEC's progress this year. Of course, we've had the roundtables. I believe Commissioner Peirce told me there's a crypto roadshow going on right now, Project Crypto. A lot has happened.
A lot has happened, and a lot has happened even without, as we remember from the Gensler days, the talk that there's no new authority, right? Like we haven't actually had new legislation yet, and the reality is that the SEC has been able to do a lot. And I don't think that Project Crypto or the roundtables are just a bunch of hot air for hot air's sake, right? And we've been seeing a different version of statements coming out to offer clarity to the market. They've been dropping both the ones that I think you mentioned earlier about tokenization, for example, when things started looking like it might be going sideways, and the SEC was like, no, tokenization of securities, still securities, right? But we've also seen the joint statement from the SEC and CFTC staff recently about spot markets. And so I think that it's a very exciting time. It's especially exciting for, I think, startups to be able to offer more of their perspective with the roadshow that the Crypto Task Force is doing. And I think it's really commendable for Commissioner Peirce to go on the road and get those perspectives that are beyond the DC lobbyist perspectives.
You mentioned something that I think is important for the audience at home to understand. It's that we don't actually have legislation yet, but still progress is being made on a regulatory front. What does that mean? I mean, when do we get that legislation, and how does that change how agencies like this SEC and CFTC operate from that point forward?
Man, that is a good polymarket question, right? Like, when will the Clarity Act or some market structure bill happen? We all know that Trump wants it on his desk by September 30th, he said, but we've got a deadline for the budget for all of the federal government also looming, and that's where Congress is focused right now. We just saw some market principles drop from the Senate Dems. So, it could be something that after this budget negotiation happens, and assuming that there's no big government shutdown, that maybe we'll see it by the end of the year, which would be actually very exciting, because then what we'll be seeing is not just SEC staff statements and CFTC staff statements, but we'll be seeing actual rules come in place, and we'll be seeing what does a kind of crypto ATS, alternative trading system, really look like? What does registration for a crypto security or a crypto commodity start looking like?
Chris, I want to kick it to you, and then I want to get back to some of the points Hermine made. But talk to us from a CFTC perspective, and if you want to add the SEC in there, you have free reign. But what do you make of the progress we've seen this year?
Yeah, I mean, this has been 180 degrees from where we were under the Gary Gensler regime, where it was like this Robespierre era of like terror. So thank you so much to Chairman Atkins, Commissioner Peirce, Mike Seelig, for returning things back to normal, right? I think we get gaslit into believing that this was the way it always was, where you're getting it, where people tell you to come in to register and then throw get you in trouble right after that and pursue enforcement action. To the contrary, like this is the way it should be. It's wonderful when your regulator calls you and says, "Hey, I'm trying to think about how to solve this really difficult problem. Can we think about it together? How do you see it? How can we work together with the private sector to make this happen?" I've had numerous conversations with the Crypto Task Force, with the chairman himself. It has been wonderful. On the CFTC side, very similar engagement from Commissioner Pham. I'm sorry, Chairman Pham. Outstanding engagement. And look, they're working together. The CFTC and the SEC used to have a joint committee where they would tackle difficult regulatory challenges. I think it was back to 2014. And then they're like, oh, we don't need to do this anymore. Like, now they're starting to come together. They're issuing joint guidance. They're pursuing principles. And again, this is normal. This is the way it should be. The way it was in the last 4 years was the way was the anomaly. So very bullish. Obviously, we have some challenges in the CFTC. There's a lot of questions around turnover. At the end of the day, things are getting done. I'm very, very bullish now that we're seeing and yes, I think Hermine mentioned about legislation. I was in DC on Friday. There's a lot of excitement. There's a lot of hope. I'm a little bit more on the skeptical side of things. I'm not sure things get done. That will be very beneficial because you'll have something enshrined, but legislation is really tough. It's just great to see there being a degree of normalization and precedent setting in the interim.
Chris, what happens if it doesn't get done? In your perspective, of course, of course you can't predict, but like in your head, what happens if it doesn't get done?
Well, we'll have good precedent because for the next 3 years at least, we're going to have agencies that are working together to come up with great rule sets that really chart a course and establish precedent, maybe what's a commodity and what's a security. It's hard to unwind when those things happen. That's one of the reasons I'm really focused on futures markets right now. Futures markets are run by the CFTC. They were stopped. They were stopped in their tracks by the SEC because during the self-certification process, the SEC would say, no, you can't have a future, that we think it's a security, so it's stopped. And because we lack futures in this country beyond some of the majors, it hurts our ETFs. It hurts whether something's a commodity or not. It hurts basis trading. It hurts institutional adoption. So these are the types of things that'll get worked out. And when we have robust futures, and then you'll have that precedent. It's hard to wind it back. And so in the absence of law, 3 years of precedent setting, and hopefully some of that gets to become normal practice.
Chris just mentioned CFTC Acting Chair Caroline Pham, who I believe is the last member left in the commission over at the CFTC. We're down to a one-member commission. This legislation that we're talking about, and that we have been talking about all day today, relies heavily on the CFTC to oversee this industry. Talk to me about how you're making sense of this. This is a conversation I had with Eleanor earlier on in the program for our audience that joined, but curious to hear your perspective from where you sit.
Yeah, so for anyone who's been following some of the CFTC politics, it's generally a 5-person commission. Last week, the second to last commissioner had her last day, Kristen Johnson. And so now it is just down to Caroline Pham. And commissions aren't designed to work by one commissioner, right? So what we want to see, and the reason why we want that, is that these are meant to be deliberative bodies. So putting that aside, that friction right now, the reality is that the CFTC is just down staff too. They've cut by 15%. If they're going to have new legislation to grant them oversight over a $4 trillion crypto market that operates 24/7, and none of the legislation we've seen gives them more budget or more staff, this is going to be crazy because this is a very technical area. And it's important to remember that the CFTC at its core is an agriculture committee, right? That's why, or agriculture agency. That's why it is overseen by the Senate Ag Committee and the House Ag Committee. They like their pork bellies and their orange juice concentrate, and that's where their staff's expertise is.
Yeah, but we have AI now, right? So we don't need as many people, I hope.
Well, Hermine,
Okay, let's see how well the CFTC can use AI, considering that, like, I mean, the poor SEC, as we know, just deleted inadvertently a year's worth of Gensler's text messages. Like, that's their OIT over there. Like, you can't tell me that the CFTC, who has a sixth of the budget, has a better OIT system.
Did you say inadvertently? Did I hear that right?
Yes, that is what the OIG report is saying.
maybe Chris has some insight he's not telling us about as to what's going on over at the CFTC. I mean, okay, Hermine, you outlined a good point there, and it did seem like Brian Quintenz was moving along in the process to be confirmed, and that kind of got halted abruptly. Chris, curious to hear your perspective here. How important is it that we get a chairman at the CFTC and we start moving forward?
Look, chairman is leadership always matters. I've known Brian Quintenz for many, many years. I consider him a friend, and he's someone I look up to. He has the right disposition to really drive an agenda, and that's what the chairman does. They set the agenda and they drive it. I think he's tremendous. I hope he gets confirmed. If not, I hope they identify somebody who can do the same. But yeah, that position's super critical. People don't know much about the CFTC. It's kind of a lesser known kind of regulator. But gosh, to Hermine's point, we're putting $4 trillion in market cap in their hands, right? And I don't think we're going to stop at 4 trillion. I think we're going north. So we really need to make sure that this regulatory body is equipped, to her point.
All right, let's move on to some legislation now. Hermine, I want to kick it back to you. I know you recently published an article outlining the Genius Act for busy people, and I think the people who watch this show are busy people, so I want to dig into that. It was published on the Digital Assets Council of Financial Professionals website, and you outlined some big holes in the Genius Act. I think it's pertinent to talk through those as we, hear some of the conversations that are coming out of the event today. Talk about where it's doing well. Talk to us about where you think we could be doing better.
Yeah, there's a lot of holes in the Genius Act. So one, we've certainly focused on the issuers, but there's no focus on the secondary markets, right? That's one big issue that is glaring. There's also, as we know, no FDIC insurance. So the general public might think, hey, this is something that now is getting regulated by all the financial agencies, Treasury, the Fed is involved. Like, this must be FDIC insured. It's not. And unless you might be crypto native, right? And we start wanting real world adoption by the general public, that's going to be a stumbling block that we haven't addressed. There's also the depegging risk, right? There are going to be events that are out of control, like Circle depeg during the Silicon Valley Bank crisis, right? Circle's a good actor, we would believe, right? But what if there are some lesser known actors who depeg? There's no consequences and there's no protection, right? That this isn't bankruptcy remote yet. In fact, like, that means that while someone who holds a stablecoin might have a super claim, it's still not an ownership claim. So they still have to go behind this line of creditors, not at the end, they're at the beginning, but it's a creditor line. It's not instant access back to your money.
You also outlined in your article the high compliance costs, creating a regulatory barrier, potentially stifling innovation. And so much of the conversation we've had today has been about bringing innovation back to American shores. Talk to me a little bit about that and how we should be thinking about it.
Yeah, like, compliance costs are no joke in the financial system. And right now, they are in the Genius Act baking in really high compliance costs, right? These are and I don't want to suggest that compliance costs aren't, or compliance isn't a great thing in it itself. It is important in financial services. But one of the things that it does is requires these monthly reports. It requires reports that are audited by one of the big four. And you could imagine that instead of requiring that, maybe there's a world to get on-chain instant transparency in real time, right? And they're not incentivizing that. They are instead baking in this kind of old school compliance process into what they say is this new technology, not taking advantage of what the technology could offer.
If I can unpack that a little bit more, after Dodd-Frank, we saw the exact same thing. We took $700 trillion of derivatives from unregulated to regulated. We forced clearing of them. And what did we see? We saw all the clearing members disappear. Why? Because regulation results in a very high fixed cost. And then it's just a business of scale because your revenue gets squeezed to zero. And so you have to be big to survive. So I do think there's going to be consolidation in the stablecoin space. I don't know if there's a way around it. I'm more bullish, I think, on the stablecoin regulations, maybe than Hermine. I think this is like a defining moment for the US dollar. We're going to see $3 trillion coming into the system. That's an amazing thing for the dollar. We're going to be exporting the dollar more than we've ever exported before. It's going to become a tool of probably monetary policy for the Treasury as well, and it's going to force buying of our debt, which is a good thing if you're the United States government. So I'm pretty excited about the policy aspects of the Genius Act.
Chris, you say you believe we're going to see consolidation in stable coins. What does that look like for you? Because right now it feels like there are so many stable coins. I hear about a new stable coin every day. It is across multiple different chains. We have big centralized players getting into stable coins now. What does that consolidation look like to you?
Yeah, I mean, there's a big race right now within the Hyperlink ecosystem for a stable coin. But generally what happens is that, like I said, high fixed costs, people get squeezed on margin, so you have to scale. Ultimately, I think there'll be a handful of major international players. There'll be some smaller ecosystem plays where it's like you go into an arcade and you got to use their token, because if you go into that arcade, they're going to want to make the spread. And so I would imagine a bunch of smaller issuers in like, niche type ecosystems, but then like maybe 2 to 3 like big global players.
Chris, I know that you told me before we started here, you have a lot to say about privateers. I don't know what that is, so just hit us with it and let's get this conversation going.
That's because you're Canadian. No, we love the Canadians, and I hope what I say doesn't upset you. But one of the things that concerns me most, and I'm a Marine, I'm a naval officer, is that you have $3 trillion coming into the system, and I will tell you that we're woefully unprepared from a national security perspective. You have the North Koreans, you have Lazarus Group that are licking their chops. They just did the Bybit hack. Things are looking great. Published an article with Christian Carlo in February. Long story short, we think the solution to these problems lies in our past. And if you study our history, one of the reasons we really won the Revolutionary War was because we issued something called letters of marque and reprisal that commissioned private ship captains to go out and wage war against British commerce. It effectively turns your defense, the best defense is a good offense. So the idea here is to go on the attack, to commission private citizens to go on offense. In doing so, they can violate certain rules, like sanctions, for example. We did it again in the War of 1812, and that helped us there. And frankly, our founding fathers loved privateering so much, it's in our Constitution. So the thesis is go back to the past, leverage the powers in the Constitution. I think Congress is kind of into this because we have to solve for security. And the way to do so is not to spend a whole bunch of taxpayer money to try to find talent that we can't find, is to let the private sector do what they do best, which is innovate. And really, in this case, go on offense.
My Canadian shows sometimes. Hermine, I'm curious to hear your perspective there.
Whoa, Chris is just like landed like a whole new area for me. I didn't even know it was in the Constitution. Shows you what kind of lawyer I am, right? But I do think that there's a sense in which the private sector, when incentivized correctly, will always act much more nimbly than the federal government can, right? That is absolutely true. And so I do think that there's real value in Chris's suggestion of allowing the right players, right? Like you go through some sort of license, I don't know what the privateer license is going to look like, but there's going to be some sort of regime where you would be incentivized to build out that kind of knowledge base and expertise and act really quickly. I'll tell you, just at Coinbase, when I was there, right, we have a really expert set of intelligence team members at Coinbase doing a lot of incredible work. And I think that if we were to leverage that kind of talent more officially, huge benefits.
Yeah, a couple of. Oh, sorry. This is regulated activity. They used to have to post bonds. In crypto, we call it staking. Oh, and by the way, when you take back those prizes, some of it goes to the house. That's how you fund the strategic reserve. No cost to the taxpayer.
Chris, we got to get back to programming in just, I think, a minute and a half now. I'm going to ask you, what is that one big milestone you're looking out for as we move forward?
Well, for me, I mean, honestly, if we could get market structure done, that's a game changer. We'll see what happens as we go into the end of the year. And then I'm trying to slip in my privateers as part of that process.
Hermine, what about you?
If the Dems could just stop obsessing about Trump and all this like conflict stuff and actually start thinking about the technology and how it could help everyday people let like more, I feel like that would be a huge win for the ecosystem generally, right? Like I do think that there is regulatory capture right now that's happening where the most well-heeled incumbents have an outsized voice in the pending legislation, and the Dems are just so obsessed with Trump that they can't see that that's what's happening.
Hermine, Chris, it is always a pleasure speaking with both of you. Thanks so much for joining the program today.
Thank you.
Thanks.
That was Chris Perkins, President and Managing Partner at CoinFund and member of the CFTC's Global Markets Advisory Committee, and Hermine Wong, the lecturer at the Berkeley School of Law and former special counsel at the SEC. All right, we are going to get right back into our programming. We're going to hear a keynote now from Counselor to the Secretary of Digital Assets at the U.S. Department of the Treasury, Tyler Williams.
Bossa Nova vibe, but we are now in the final stretch of the program. Thank you all, the heroes here, staying in tune. You will not be disappointed. I'm Michelle Noyes, head of Americas for AMA, which is the world's largest trade association for alternative investment managers. And I also co-chair AMA DOG, which is our digital assets working group. I'll be taking part in the final roundtables with my colleague Joe, but for now, it is my pleasure to introduce someone that many of us in crypto know well from his days in the private sector, Counselor to the Secretary, Digital Assets, U.S. Department of the Treasury, Tyler Williams. Tyler is at the forefront of shaping the U.S. government's policy on digital assets, and I look forward to hearing this discussion, which will be expertly moderated by Georgia Quinn, Chief Legal Officer at Securitize. So Georgia, Tyler, please come on up.
And thanks to CoinDesk for this wonderful event. But mostly, thank you to Tyler Williams. So if we could please just get a little round of applause for one of the instrumental participants in the very first crypto digital asset federal legislation in this country. Thank you, Tyler. Thank you for the service you've done for all of us here.
Thank you very much. That's very kind of you. I mean, it's a little bit of, I'm the first person to have this job at Treasury, so I feel like the applause is pretty easy. It wasn't around before him, so thank you.
Okay, so I remember in like 2021, a colleague and myself went into Treasury and we did this like big presentation on stable coins, and we were going through all of the wonderful policy rationale for having stable coins in the US and passing some form of legislation. And we went through everything from maintaining a strong dollar to like the national security rationale, and just potentially even lowering interest rates. So this seemed to fall somewhat on deaf ears. While there were many people within the department that seemed to understand and were sympathetic, there was no real internal will to actually move and do anything about it. So could you please tell us what it's like with this new administration, what has changed, and what you did to really get this over the finish line?
Glad to unpack it a little bit. Before I do that, I'd like to say I was here in 2023, and since you're giving a rendition of like your past experience here, I moderated a panel here in 2023, and I can't remember the exact contours of the discussion, but it was all about whether or not you should stay in the US, whether or not you should go elsewhere, and everyone was thinking about forum shopping and where they wanted to set up their company. And the last question, I can't remember who sang the song, but someone out there shouted, it's do you stay or do you go? The last question of the panel was do you stay or do I go? Yeah. And everyone unequivocally in the panel answered like, I'm here to stay. And I think they made a good decision. Like, I think a lot has changed in the course of this administration, and there is clearly a unified will or desire to fix a lot of the problems that existed in the regulatory and legislative ecosystem. We've had a bunch of good panelists come up and talk about the legislative activity. I think we've just seen quite a bit of institutional will, both in Congress and the administration, which is necessary to get durable changes in law. You have to have the institutional will, and we clearly have that. The Secretary of the Treasury is bought in, wants to do something. The President wants to do something. We have leadership in the White House. The President issued an executive order to establish a council at the White House, and like that's really important because it's a body within the White House that is solely focused on getting things done in crypto. And I think we've made a lot of progress in the first couple hundred days of the year.
You think?
Yeah, I think so. We got a bill signed into law. So we heard French Chairman Hill talk about that a little earlier. So we've got good work there. Treasury and the other regulatory counterparts under Genius are working to implement the law. We wrote a comprehensive framework charting the path forward of all the things that we want to change and do from a reg and ledge perspective. We put that report out at the end of July. I'm definitely biased, but it's the most comprehensive report that I think any government has written on digital asset policy across the world. So we're proud of that. There are hundreds of recommendations in there, so everyone wants me to come and talk at conferences and say what we're working on, but like we put it on paper what we're working on. We're going to try to go do all of those things, and we will measure our success based off of how much we accomplish. So there's lots of work to do, but that's where we are.
Great, yeah, and I mean, I think we can definitely all see that. And that is, with respect to Treasury, but, and what have we been, like 8 months now? What about the other agencies? I think we're kind of seeing an unprecedented sort of opportunity now for agencies to come together and work. I mean, we have the executive order, which basically kind of mandates that. And so what are you seeing on a day-to-day basis with respect to other agencies that have to provide input or feedback or, collectively work to promulgate these rules? And, if you can tell us who have you really enjoyed working with? Who are the holdouts?
I don't think there's holdouts. I don't think there's problem children in the administration or across the executive agencies. the executive order that the president issued set up this working group, and there's Treasury as a part of it, Department of Justice, Department of Commerce, the SEC, the CFTC, the Office of Science and Technology and Policy. The laundry list of people and agencies who care about digital asset policy, they're in the working group. We meet every week and we talk about what we need to work on and what we've accomplished and what we need to continue to strive forward. So I don't think there's any holdouts across the government. Everyone wants to work and get things done. So maybe we have the reverse problem. We have like so much enthusiasm, like we're all going a million miles a minute. And we have lots of things that we're trying to accomplish, but everyone seems to work well together. And I don't have favorites of who I work with. I like everyone I work with.
That's nice.
That's the PC answer.
Yeah, you gotta say this is
including all the industry. We've done a bunch of meetings during the part of this report writing process.
How many over?
I lost count. It's over 750. It's over that.
Not bad.
That's just like my team at Treasury. Like I don't know how many we've done across the administration. So thank you all for coming in and talking to us. Like you can't have good policy unless you talk to the people. So I think we're proud of like the engagement that we have.
Why does that seem like an enlightened thought just now? But yes, that's exactly right. You can't have good policy without talking to the people. Thank you.
Sure, no problem.
Amazing. Okay, so let's get to some specifics of the Genius Act. I know there's some things you can and can't talk about, but in the current legislation, stablecoin issuers cannot pay yield earned on reserves back to the stablecoin holders. Can you explain, kind of the rationale, the policy behind that? And do you know, is this like a forever thing, or maybe in the future when no one dies and we can take new steps with this asset class?
It's a good question. I don't pretend to know all of the background and sort of the negotiations in Congress, but I would say, just having worked there for 8 years almost, like getting legislation done in Congress is about compromise, and you have to find a middle ground, and there's lots of constituents that care about this particular issue, so that was the path that Congress chose to go with. Now, Treasury and the other banking regulators, we have to implement the law, so that's what we're working on. So unless and until Congress changes that, that's what it says. How's that for you?
He's good, guys. He is good. Okay, so another really neat feature of the Genius Act is that you can use tokenized securities as reserves and other tokenized assets as reserves for stable coins. Why do you think that's a good idea? Asking for a friend.
Well, I think maybe I'll sort of give you another non-answer, but I'll unpack a little bit. I think many times Congress attempts to legislate for very particular spot issues, so it's very much a reactive organization optimization body. And I think in this instance, what we've seen is Congress take a little bit of a more prospective approach to the industry, and it's a fast-moving space. What I think they have taken a look at is like, what are the ways that we can think about a future state of the world where we have more assets moving on chain, and what do we need to think about giving regulators the flexibility in order to be a little bit more forward thinking. And so I think that's a good example of what we've seen in Genius, particularly with the tokenized reserves.
Yeah, I mean, we certainly view the world in that many of these assets will just inevitably be on chain. It's just a better ledger to use. And I do really give kudos to the legislature for
super fortunate. One of my good friends and colleagues, Luke Pettit, he's now the Assistant Secretary of Treasury. For financial institutions, he also worked quite a bit on this when he worked for Senator Haggerty. So without his foresight and leadership, we wouldn't be here.
Okay, so let's talk more about RWAs, shall we? For no reason in particular. No, certainly at Securitize, we think that this, has a huge market opportunity, and I'd love to hear your thoughts on what you think is necessary to kind of open this up for institutional scale. Personally, I think that from a securities law perspective, the actual 33 Act issues and the issuance of these assets is not a big deal. I think the current regulatory framework works pretty nicely. It's when we hit the secondary markets and you want to start having additional functionality for tokenized securities and other types of RWAs potentially that we might need like guidance or clarity. Have you given that much thought?
We've given it some thought. We talked a little bit about this in the report as well. I think, you tell me if I'm wrong, but I think what most people want to see is like durable legislative change in this area. Like what they want to see is like the clear framework from Congress for like what's a security, what's not, and all the sort of derivative, no pun intended, all the derivative sort of technical issues that flow from that. And I think if that happens, then we can see a future state where many types of real world assets are being tokenized and put on chain.
I think that perspective is really important because we are at present the beneficiary of the whipsaw, but it can always flip back. And so having durable legislation in place, I think, is really, really important.
Yeah, and it appears to me, and I know Chairman Hill also talked about this an hour ago or so, there's just so much enthusiasm and momentum on a bipartisan level to getting something done in Congress on market structure. And like, there's a big push from the administration, a big push from Treasury. Like everyone wants to get something done. And the sort of clock is ticking. So to me, it's just a question of like, when it happens, not if it happens.
Yeah.
And I don't think we were in that point in time a year ago today. Like, it was a big question if something was going to happen.
Yeah, no, this is uncharted territory. This is amazing. Almost a little euphoric, but it's cool. Let's roll with it. When you say the clock is ticking, though, do you feel the clock is midterms? Or do you feel like we get the full administrative period?
Oh, I just mean that there's time on the congressional calendar and they have to balance what they need to do.
Yeah.
And
but do you think midterms are going to be like a super distraction? And
I think there's a very good chance that it gets done this year. Like we're all going to work to try to get that done.
Amazing. Okay. So shifting forward to additional potential legislation and policy, as we've talked about this before. In the U.S., we have like a real patchwork of financial regulation at the state level, at the federal level. How do you see that playing out, especially when we start looking at things like the Clarity Act? I mean, even Genius allows for that state pathway. And so do you think this kind of system is really sustainable for a truly global marketplace?
It's been sustainable for the U.S. banking system for quite some time. I don't know why it wouldn't be sustainable for this industry. Like, I think it's a feature, not a bug, that we have pathways at both the state and federal level. We need to embrace that, and of course, like, it means that there's like more technical work that you need to do to ensure parity between like a federal regime and a state regime. But we want people to be able to like domicile in the U.S., like build companies, build businesses, and like if there's state pathways that they can do that, we want people to avail themselves of that. Obviously, it's super helpful from like a national market system to be able to have federal licensing, and that's exactly what we have in the Genius Act. So I think that's really important to have in the market structure conversation as well. But I think having the option of having state pathway is a feature, not a bug.
That's great. And we really did see that in the U.S. because both Wyoming and New York really provided a bedrock to the legislation that we now have, before Congress and actually passed.
Absolutely, and if you think about things like what's an appropriate corporate or a corporate vehicle for companies and foundations and labs to be able to avail themselves just from like a structural perspective, if that can exist on a state level, and we've seen different states take substantive action to put that in place, like that's a good thing for companies.
Yeah. And even just thinking like from other types of infrastructure like cybersecurity, I think someone else earlier today mentioned that New York State was the first to really implement like a true fintech cybersecurity policy with Part 500. And I think now, other agencies are adopting those kind of protocols, which is really, all right, so maybe the incubator model works, okay. So tell me now, what's really next on your agenda? Like, what are the things you're focusing on at Treasury?
I've always thought about our sort of policy apparatus, this admin, as sort of three legs of a stool. We have Genius, which has been signed into law. Now we have to do all the rule writing, and that takes some time, and we really need to get it right. So we're very acutely focused on that. The report was sort of the second leg of the stool. All of the things, even Genius, that we wrote about, whether it's tax, whether it's illicit finance and BSA, AML issues, whatever it might be, we put on paper all of the things that we want to do. And now success is sort of like how much can we accomplish from that. And then the third leg of the stool is market structure. If we can get sort of good foundations for the stool, we can fix, shine it and sand it and do all those things. So success will be like, can we get all of these, can we get the infrastructure built, and then how much can we get done?
Your model is like a cake eating contest where the prize is more cake. You've got all your things accomplished, and then that just means you have to do more work. Genius Act, now you got to promulgate the rules. You put out your report, now you actually have to do it, and even with clarity, like there's going to be more rulemaking.
Sure, but I mean, it's important to be transparent with the public. It's important to be transparent with the industry. What we've tried to do is like build transparency and communication with the public, and even with foreign regulators and foreign finance ministries. Like, it's really important to be able to say exactly what we're going to do, and we've done that. And we'll put out, public comments for people to. You saw that we did that already.
Yeah, I was going to talk about that.
Yeah, request for comment from the terrorism financial intelligence vertical. So that's open, and we'll continue to do that type of work.
So, I mean, this is like pretty lofty stuff here. It's very ambitious. What can the crypto industry do to help you reach this success?
I would say continue to do it. Like, everyone was very eager to come in and find, sort of an open venue to communicate with. I would say don't be shy about doing that. What's always helpful for us is, like, if you put your substantive commentary on paper and send it to us, like, we actually do read it, and we're required to read it.
I know, I'm like, you're actually legally obligated to read it?
For APA things, 100%, we are required to read it. But even if it's, a policy idea or a concept, like, send it to us. Like, that's the only way that we're going to be informed on your ideas. So continue the cadence of communication and tell us what you need.
All right, you'll be hearing from me.
Okay, great.
You
Look
always do,
forward to
though. Okay, so one thing you mentioned briefly, so we talked about kind of moving from the state kind of incubation model, moving up to federal regulation, but then now on a global front, what kind of things are you doing to help, United States not only stay, competitive or a leader, but then also integrate with other marketplaces globally?
Just an example, in the Genius Act, one of the things that was put in was the ability for the Treasury Department to enter into reciprocal agreements with other foreign sovereigns on permitted payment stablecoin. So that's like an element that's already in law. Like, we have lots of work to figure out the details and how to execute against that. But I think we're looking for different ways that we can explore integrating, working with other finance ministries, other securities regulators across the world, whether it's the FCA or whatever it might be, in MAS. Like, we have conversations like that all the time. So I think, in particular in this industry, because it is so global, like, you have different experiences and lessons learned from different marketplaces. Those often can be quite instructive to how we should think about particular policy issues. So again, it's just another opportunity. You asked me what to tell the audience to do. Like, just tell us your lessons learned from across the globe. Like, that is really helpful to us. Because Treasury is not only, well, now we're a regulator in stablecoin world, we're also a finance ministry, so we have quite a bit of diplomatic engagement with other foreign sovereigns. It's not particularly my job on a day-to-day basis, but I get dragged into it quite a bit. So,
and I have a feeling you will be getting dragged in more and more as
that's not a bad
markets
thing.
become more digital in nature.
Absolutely.
Yeah. So, all this is fun, important policy stuff, but just putting back our little crypto geek hats on. What is exciting you right now in the industry? Have you seen any new innovation or use for this technology that is interesting or inspiring or piques your curiosity?
Well, I think that when I was in a previous job, we always got asked to show up to policy meetings and show the use cases, and it's an interesting thing in Washington. You don't get asked that in very many other policy arenas, like, show us the use case for X, Y, and Z. But in crypto, it happens. So I think what we've seen is a deeper understanding in Washington policy circles about the functional utility for payments, cross-border payments, whatever it might be, tokenizing real-world assets. So I think people have started to, that communication and advocacy from the industry has started to see. So I'm excited to see that. How's that for an answer?
That's pretty good. Pretty good. We'll take it.
Okay.
So, just as a final thought, I think we've been able to kind of touch on where we are here and now. You've told us what, you need from us, which I hope we're all equipped and ready to do. But looking forward, just like after this administration, what do you see, do you see any broader changes in our government? Do you see more opportunities now for bipartisan support for things? Do you see any hope, after this administration?
Any hope? I don't know exactly what you mean by the question. I think that the hope is here and now. Like, we're going to continue to drive forward and get durable change. I think once we have that durable change, it's incumbent on the people and the builders in this space to show up with the demonstrated ideas and the concepts that they can bring to bear to change and make people's lives better. So we're here now trying to do the stuff. The hope is everyone comes in and shows how they can make everyone's lives better with the functionality of the technology.
Yeah, I guess, just being in crypto, we're so used to, it can't be this good. But anyway, thank you for helping us get where we are now.
Sure.
And yeah, we'll just do the best we can to help continue to support you and the administration.
Great, thank you very much.
Just the next panel, just a reminder. So the 4:45 networking sessions, it's the official closing cocktail break, but do look at your agendas. You should have a one-sheeter that details all of the participants in that cocktail hour. I think we have 27 or 28 speakers. They're going to be stationed everywhere. They're there for you to meet with, and it's Chatham House rule, and it is closed to press. So please do take advantage of that networking hour. Okay, so what do you do when you have a lean CFTC? You bring in the former chair of the CFTC and former commissioner. So Russ Benham and Summer Mersinger is joining us today, and they will be moderated by the inimitable and one and only Chris Brummer, and I cannot wait to hear the next session. So please come to the stage.
So, nothing much happening in CFTC land. I have absolutely no idea what kind of natural first questions to ask these wonderful leaders and experts in our financial system and for CFTC issues first. Usually you jump into some of the most substantive issues impacting our financial markets, but hey, let's start with Twitter. We've recently seen some very direct comments by Brian Quintenz, who has been nominated to lead the CFTC, and providing some very compelling documentary evidence of interactions that he has had with some of the Winklevoss brothers, and really sort of going to the public square to make his case and to clear the air, to provide clarity, which we'll get to a little bit, in terms of his own interactions with Gemini and I think just in general in his sort of status right now as a chairman in waiting. I'm really curious to get both of your views and perspectives. If you have any comment, I'll start off with Russ first, only because I just want to pick on him, and there's nothing, no other real reason, and then Summer.
Thanks, Chris. Good to be here with everyone, and especially next to Summer. It's great to see her. Look, I would say this is really fresh off the presses, I think, in the past maybe hour or so, even less. But the nominations process is very difficult. I don't care who you are, what administration. It is a time-consuming, stressful, all hands-on-deck situation where you have help from the administration, your family needs to make sacrifices, and you're putting yourself out there. And using the phrase, Chris, you used about getting out there in the public space and using that bully pulpit. And obviously, it's much longer than we would hoped for Brian to get into the chair. At this point, getting well into September with still some uncertainty around the committee vote and the Senate vote. And I think it's important for him, obviously, to make sure that the air is clear. There's been a lot of back and forth in the press, and as much as we trust the press with good information, I think it's important for that individual who's been going through this process to make sure that the public knows about his commitment to public service and what he has done and what he hasn't done. And I think it's important, and I, quite frankly, applaud him for doing this, because it does take, quite frankly, a lot of nerve to do that. And obviously, this is something that's impacting him, and he wanted to be able to tell the broader public, the crypto community, but everyone else who's in our space, the CFTC constituency, which is large and broad and is very impactful to financial markets. So tough situation, but one that I think is important for him to feel confident to be able to go through the next stages of this process, to get into that seat with a clear head and fulfill those goals and that high responsibility but privilege that one gets when you get to be a commissioner or chair. So more to come, but I think it's an important step for him on a personal level, but also as a nominee to be chair of the CFTC.
It was an extraordinary step, and it took a lot of nerve to do so. Summer, any other thoughts?
Well, we could probably do the whole session just going back and forth on this, but to Russ's point, it is a very emotional kind of a personal journey to be nominated, to go through the process of being vetted, and to go in front of the committee and get voted on. It's everything you've ever done is exposed. Your whole life is kind of out in the public. And so you have to have, kind of a backbone and be ready to handle that. And so, Brian is the right guy for the job. He is well qualified. He has a heart for public service, and he knows this work. So at the end of the day, my organization, a lot of other crypto organizations have come out more than once and said we would support Brian. We'd like to see him get confirmed as soon as possible, and hopefully that happens, and this is just a bump in the road.
Yeah, it certainly was a profile in courage, and I was very impressed by it. Both of you two also have a keen awareness, a very deep understanding of the functions and the operations of just the CFTC as an organization and mechanically. And Summer, you had sort of mentioned about the idea of assuming the post of chair. Could you maybe, a question I guess to you both, what is the law professor minimum threshold, the minimum amount of clarity, regulatory clarity, political clarity that's needed and required just for the CFTC to operate? I'll start off with Summer, and I'll reverse it now.
We'll ping pong here.
Yeah.
I mean, it's operating now. So, arguably, and according to the statute, it can operate with one person. I think the question is, politically, how does the administration feel about bipartisan commissions and independent agencies? That is something that we're watching play out. Personally, I found a full slate of commissioners a really healthy way to be in that space, to work at the CFTC, to cooperate. And I do think, for it to function optimally, a full slate of bipartisan commissioners is probably best case scenario, but just operating, it can operate with one.
Yeah. What do you think, Russ? Could you have sort of sat around in a corner and done it all by yourself?
One sort of personal anecdote was before Summer joined in April of 22, I was with Commissioner Stump probably for about 6 months, if not more. I can't remember what the time was, after Commissioner Quintens and Commissioner Berkovitz left. And I remember talking to, I think Rob Schwartz was the acting GC at the time, just saying, let's put together a little bit of an analysis of like what happens if Dawn were to leave. Dawn had said she was going to stay until the new slate of commissioners came in, and at that time, consistent with what Summer just said, we had the authority to operate the commission if for whatever reason she left. So the doors will open and the building will operate. That said, couldn't agree with Summer more. When you're chair, it's a little bit different when you got 2 commissioners on each side of you trying to basically make your life miserable. But you get through it and that's what you sign up for. And ultimately, if you think about in the context of maybe a question or a discussion we heard on the previous panel, from a market's perspective, continuity, consistency, stability, are probably some things we think about in the context of what it takes to run a business, especially in financial services, when it comes to regulation. And on a personal level, Summer and I always got along well, but on a professional level, we certainly disagreed in the public and private. And it was her advocacy, her beliefs that were born and raised across a number of different venues from the time she grew up in South Dakota to her time on the Hill that were different than mine. So we had very different perspectives, but she ultimately anchored me, and the other commissioners did too. And what that does is it pulls me away from the infrequent ideological rust doing something that's a little bit off the reservation and keeping me down the middle. So I think that serves all of you well as an industry to say, let's get agencies, these independent agencies, fully staffed with a bipartisan commission so that the outcomes of policy are things that future commissions can live with, right? As Republicans and Democrats swing back and forth, and it always does, when we have a 5-0 vote or even a 4-1 vote, that has sustainability to it, more so than a 3-2 vote or a 1-0 vote, right? So those are the things that I think are really important to think about from an independent agency standpoint, because it helps us think and learn from each other, but it also helps the industry know that there's going to be continuity for literally years to come.
Yeah, I really appreciate those comments, particularly on the question of the long sort of the arc of financial regulation and how much stability one has just in the corpus of our financial regulatory rules. And if you end up with rules with which you're not able to secure some kind of buy-in from the other side, that ultimately you get much broader vacillations in policy every couple of cycles. You had mentioned sort of the early days over at the CFTC. Now we're obviously moving towards more clarity with Genius. But when you think about things like the Genius Act and the legacy of the CFTC in particular in its regulation of things like payment stablecoins, where do you think the story is going to be written about what the CFTC's role was in terms of getting to those regulatory outcomes? What kinds of lessons potentially are there looking forward in terms of what the CFTC may be doing, or frankly, any other agency? I'll start with you, Summer.
Yeah, Genius is interesting because they actually they took stablecoins out of the definition of commodities. So it put it alongside onions and box office receipts. So it creates kind of an interesting legal question. I think the commission or the markets will continue to have futures on stablecoins. I don't think that's going to change. The commission will still have their authority around those markets and the trading there. But I will say the commission's kind of the history of being pro-innovation, being flexible, letting markets offer futures on stablecoins. It really did, in my mind, help move things along, make this more of a mainstream financial product that people are comfortable with. So I think they should take a lot of credit for where we are and how far we've come on stablecoins.
Russ?
A sort of personal anecdote that I had the sort of benefit of being chair at the time that this discussion was going on, but the CFTC settled with Tether, I think back in September of 22. I could be wrong, I'm sure someone in the room knows. And I remember talking to the secretary at the time about that order, And precisely what Summer mentioned is like without legislation, stablecoins are commodities. They're certainly within that definition in the CEA. And she would ask me, like, do you think they're commodities and they should be regulated as commodities? I said, no, they're essentially depository instruments. And if we think about legislative efforts, which happen multiple iterations leading up to Genius passing, that's ultimately where it landed, and drawing distinctions between stable coins and digital assets, crypto and whatnot. So I think it brings clarity. It really literally is the issue that we've been debating and articulating for years. Is you have a regulatory vacuum, a legislative vacuum around these new financial instruments that are novel in many respects and that existing statute did not contemplate. So important first step. I know there's more to come, but I think from a CFTC standpoint, notwithstanding, again, what Summer said appropriately, it puts stablecoins in the right box, right, within the right prudential regulation, and allows the industry to sort of grow and innovate, but also gives the regulators the tools they need to properly regulate them, because like every other enforcement case the CFTC brought in the crypto space and continues to bring, it really is about responsive tips and complaints as opposed to traditional regulatory structures that allow the agency to do its job.
So clarity exists along a spectrum. On the one hand, what Genius did was to provide some formal guidelines, and I love the idea that stablecoins are next to onions and box tops. That's I'll have to tell my students that next week. They'll be thrilled and confused and dazed by that observation. But that's sort of an initial step, right? How much clarity is there when you combine the regulatory or legislative advances that you see in Genius when you start to think about the larger overall crypto agenda for the CFTC? Certainly, clarity is possibly getting there. It's a little bit like the weather. Oh, it's a little bit cloudy today. Oh, wow, it's great. The next. But until you actually do cross that finish line with clarity, how much clarity and what extent do you have the ability to continue to create clarity? How much exists at the regulatory level within the agency with the tools that they currently have, in your view, Summer?
So we should have a drinking game of every time we say clarity, we
totally
take a drink here.
I can't see anymore.
We're going to be saying clarity a lot. There's a lot that can be done on the regulatory front, kind of in preparation for legislation, before legislation gets done. There's some ability to categorize the digital assets that are out there already that they're able to say, this is definitely security, this falls in the commodity space. Questions around custody, questions around, using different, whether it's stable coins or other digital assets as collateral in some of these trades. I think all of that can be done through the regulatory process before we get legislation.
Russ?
The one thing that pops in my mind, and it's personal, I think, for us, and it's instructive for the group, is I think one area you and I disagreed on was DeFi, and we did bring a couple cases in the DeFi space. And Summer wrote some great statements about it's on the responsibility of the agency to give more clarity, someone's drinking, to the industry for what a path to registration means. And I disagreed on it because if you look at the statute, in my view, if you offer leveraged contracts or futures, you have to register, whether as an intermediary or a DCM. And I think as much as I still believe I'm right, or my position was right, I totally understand Summer's view. And I do think in an ideal world you have, whether it's guidance, advisory, or ultimately a rulemaking, but such an active time, a lot of moving parts. And I think we tried to take steps towards that, but that's one specific issue within the larger context of market structure and digital tokens of what can the agency do. That was something I learned from Summer, obviously, and her thoughts on that. And if I was doing something maybe a little bit misguided, or we should have been doing something more, but important area and very tricky. There was so many legal questions about subpoena and how do you subpoena and what's due process. And really novel issues, which I'm sure many lawyers in this room dealt with. And you do your best at the time to kind of deal with it, but in retrospect, sure, maybe you did something different. But there again, to your second question, Chris, the benefit of having a full commission.
Did you want to? Oh, but when I think of that toolbox, because Russ basically sort of introduced or reminded us of what some of those tools are. You do have staff guidance. You have enforcement actions. You have speeches, for sure. And each one of those tools can get you different things depending on what your ultimate objectives are. The CFTC in particular has been very much ahead of the game, I think, when it comes to crypto assets originally. I mean, we can go back to Christian Carlos' work with Bitcoin futures, but there's always this question ultimately as to whether or not the technology itself is of a particular nature that whatever rulemaking, or excuse me, whatever guidance that you have, sort of deeper structural changes might need to be made. The subpoena question was a very interesting one, obviously, where you have lots of different novel issues just that are generated by the nature of the technology itself. And it reminds me to once I was taken to a very dark room with folks from our national security agencies, and the question that was asked to me was, "Look, Chris, we just want to know, who do we send a subpoena to?" And I'm like, "Oh well, but when you think about the technology questions, right, and where sort of the rubber hits the road in terms of what you can get through a speech or a rulemaking or et cetera, are there certain kinds of things that you just sort of feel either in your gut or intellectually or otherwise that like we really need to have some of that very specific rulemaking? And Tira's like pointing at me. Like she's just going to like just jump up here. Can I? But I'm going to finish my nerd. So you have like 30 seconds.
All right, Ross, go first.
So I'll say this is.
I actually didn't see it because this hides the actual timer, so I didn't see it.
So it's their fault. The rulemaking process is very difficult. It takes a lot of time, and it's not just proposal, comment, finalize. Like there's literally months, if not more than a year, of work that has to go into putting together a rule proposal. And I would just say the markets are moving faster than that process. And you have to comply with the APA. You have to do all the nuts and bolts to make sure that you're not sued and you don't put the agency at risk from a litigation standpoint. So advisory guidance becomes a very powerful tool that can be issued very quickly to give the market a signal about what the commission generally thinks or staff think about an issue. So that's my 30-second response.
That was extremely efficient. Did you?
No, I totally agree. There's a lot of things that you can do short of rulemaking to help carry out policies. I think we're seeing that with the President Working Group reports and the recommendations they had for the CFTC and some of the things we've seen out of the commission lately. So certainly there are other tools than rulemaking.
Very good. So the cane is pulling us out. So thank you so much, everyone.
Thank you.
With the question, who is Patrick Witt? We are about to find out, and Tom Farley is going to get us those answers right now. Gentlemen, come on up.
Great. Good afternoon. Good to see you all again. New executive director for the President's Council on Digital Assets. It's a mouthful, and it's a hugely important job. Patrick Witt. Who's Patrick Witt?
Great to meet most of you. A lot of familiar faces in the room. It's funny with that title. The other title that I held for the first months of the admin was I was performing the duties of the Deputy Undersecretary of Defense for Research and Engineering. So I think that's might be the only title that tops the one that I have now. But Yeah, my background served in Trump 45, back again this time around, have been dual-hatted at the Crypto Council, kind of shorthand for the Council of Advisors on Digital Assets to the President. But have been dual-hatted at the White House since April as deputy to Bo Hines, good friend of mine, obviously former colleague now. But so I've been involved in this space, but there's nothing quite like being in the seat now, and so took over when Bo stepped out. And it's just been a flood of all sorts of exciting things going on right now. But I will say, just kind of to lead off, this whole group here, the entire crypto industry has been so incredible, welcoming, helpful, getting me up to speed on issues that I may or may not have been tracking on. So thank you so much to everyone in this room, and many of you who I hope to meet in time. And just one last note, and I'll pass it back to you. We obviously are processing and digesting the news out in Utah with Charlie Kirk, and just want to say our prayers, our thoughts are with his family. Obviously, really shocking, and just shakes you up. So puts things in perspective, and we're praying for him right now.
Yeah, agree. Utterly talented guy, and super sad. The only encouraging thing was the update I heard from you that he's alive and hopefully stabilizing. I went deep in putting together my file, and went back to your college stats. And I'm a Georgetown Hoya, as is my wife, as is my oldest daughter. And I got as far as figuring out that you threw for 1,000 yards and 7 touchdowns against my Hoyas over 3 years. And I said, that's enough. No more of this stuff. But on a more serious note, you were in your younger days a very accomplished quarterback. And part of being a quarterback is getting people to work together, people of all different backgrounds and ideas, and going different directions and get them headed the right way. And one thing I'm particularly interested in is we've had the Genius Act, and now we're on the market structure, whether it be Clarity or a Senate version, and that requires 7 Democratic votes. And I imagine that's part of your remit. How do you get everyone lined up on a market structure bill here before we run out of time?
Well, for any Democrat colleagues out there, or staffers, listening, we want to engage, we want to work across the aisle. We obviously need the votes, in order to get it passed, but it's not just about, delivering a political win. The technology speaks for itself, right? And we're democratizing finance, we're lowering, friction and intermediary fees. There's so much here that everyone can rally around that's not, partisan in any sense. And so we're actively reaching out to colleagues on the different committees, staffers, and so far I'm very encouraged by the signals that we've received. Obviously they put out some principles the other day, and we're engaging with those. So we look forward to continuing that over the next few weeks and months, but absolutely we think there is common ground to be had here. Senator Lummis just echoed that sentiment today in reacting to some of those principles that the Democrat senators put out. So it's going to be an ongoing process. We're going to have to work through some issues, but I'm very encouraged where things stand right now.
So I dove right into a topic near and dear to my heart, but let's take a step back. When you get out of bed and you roll into the office, what are your priorities? What do you view as your most important initiatives for 2025 and maybe even 2026?
Yeah, so front and center, obviously getting a market structure bill passed right now. And as I mentioned, there's been a lot of great progress that's happened even over the past week. Some of the conversations that we've had, industry folks coming together, compromising on some language, moving things forward in Senate banking with their draft out. And we look forward to looking at Senate Ag's draft here pretty soon. And then maintaining that connectivity with the House, so that whatever comes out of the Senate is ultimately a bill that can also pass out of that chamber. So market structure, first and foremost, is our top priority right now. But strategic Bitcoin reserve, working to come up with additional creative ways to acquire into the strategic reserve, and then also the digital asset stockpile, shoring up some of the agency authorities that are needed in order to effectuate that. I would put tax in there. We've had some great conversations recently with Jason Smith's team in the House, Obviously, Senator Lummis, has a tax bill out there, so that's another one that we're tracking on. That would be up there. And then lastly, I would say, to Bo's credit, to Harry, Nick on the team, the work that they did to put together the working group report. It is chock full of great ideas, many of which have already been implemented, and we meet regularly to keep that accountability for the remaining ones that are going to take a little bit longer with rulemakings and so on and so forth. So I know that's a lot there, but market structure, tax, strategic Bitcoin reserve, and then the interagency recommendations.
Can I just drill down for a second? You referenced the Bitcoin reserve and then digital asset stockpile. Can you go one or two sentences more? What's the I've lost the plot a little bit. We had this. I was busy this summer with a corporate transaction we had. Where are we with in terms of Bitcoin reserve, digital asset stockpile? What's the intent there?
So the president's executive order established, that we as government, stop selling these assets. Let's do an accounting. Let's take a beat. Understand what we have, make sure that we're custodying these, with proper security, and ensure that these are not being sold off, at fire sale prices, right? The finally forfeited assets to the government are going to form the foundation, so the crypto that we already have on the balance sheet is going to stay on the balance sheet. And then from there, we're going to explore the budget neutral ways to acquire more into the reserve and the stockpile.
Mostly Bitcoin, but also some of those other crypto assets that have been mentioned previously. Is that the
right? Yeah, we recognize the unique nature of Bitcoin, and so that's why that was called out specifically. But there are many other assets that are on the balance sheet, and so that's what the stockpile.
Okay, great. I wasn't trying to catch you up with your words at all. I just wasn't sure if it was beyond Bitcoin or not. One of your initiatives and one of the things that you and your predecessor, who often would be referred to colloquially as like the crypto guy, so that may be your title eventually, is just spurring innovation and fostering innovation. What does that mean to you?
So we see, let's make a clear distinction, right? Like, we're not the innovators, right? Like, y'all are the innovators, the industry is the innovators. What we need to do is give level playing field, clear rules, clarity to the market so that you can innovate, right? To the extent that, there are ideas. I had a conversation just recently with someone who wants to pursue maybe a hackathon, using government data. Commerce obviously just published some of their data on chain. We're looking at other agencies to potentially also put their data on chain and then come up with creative ways, how we leverage that. And, we're all taxpayers. We all interact with the government. What are ways that we can actually make the experience as a citizen interacting with your government that much better? So again, we're here to make sure that the industry is able to innovate because they're full of great ideas. They just need, certainty that they're going to be able to, innovate and do the things that they think are really promising. And it's our job to make sure that they have that clarity from us.
I just want to observe, if you're wondering, does your job, have efficacy in the real world? It's happening. It's happening. I'm a believer in blockchain and this layer of programmable finance. And there has certainly been innovation over the last decade, but the pace of innovation has increased dramatically. And in my view, it's because of a far more welcoming posture from your office, from the work you've done, from your predecessor, all the way up to Congress, to the president. Look no further. My old arch enemy, NASDAQ, in the last week has announced a strategic partnership. They've announced an initiative to tokenize stocks, to move to 24/7 trading. And that's just one example. I could literally rattle off 25 companies. And so it's working. And thank you for everything that you've done and the administration and Congress is now doing as compared to what was happening.
Yeah, it comes up in every conversation that we have is just what a breath of fresh air this is to be able to come in, have the conversations, talk about what we're building, and be met with, eagerness and how can we help? How do we unlock that for you? I would be remiss if I didn't, mention, like, it starts from the top. We have an incredible president who, made a clear decision, during the campaign, like, we're going to go pro blockchain, pro, crypto. And it has flowed down from there. Obviously, David Sachs, an incredible boss, visionary, and both, his dual roles, both on the AI side and the crypto side, because there's obviously confluence there. You mentioned innovation. That's one of the exciting, frontiers that we hope to explore. And obviously, his foot in both camps, allows us to push that forward. But it's the president's leadership, it's David's leadership. We're just here to row the boat, as it were. But we have two great captains.
Keep it going, because I really believe that blockchain could be an incredibly important part of a more efficient free enterprise system.
Yeah.
So for those of us who aren't kind of DC nerdlers, and I can only say that partly about myself, having run lots of regulated entities and having grown up here and gone to high school a few blocks away at Gonzaga. What do you actually do? Like, are you working the phones? Are you, do you have like Senator Gillibrand on line 1 and you got, Richie Torres on line 2? How's the sausage made?
Every day is an adventure. I'd be lying if I said, it looked a certain way. Every day is different. It is a lot of work on the phones, working across the interagency. Tyler Williams and his team over at Treasury, Taylor Asher over at the SEC, our CFTC colleagues, two of whom we've kind of stolen on our team in the White House. But it's a lot of not herding cats, but just everyone's having different conversations. There's so many different industry actors. Everyone provides a unique perspective, and so I think what Bo did a great job of was establishing those relationships, the connectivity, and then kind of crowdsourcing different issues that come up, talking to different people. As I mentioned, they all have unique perspectives, and it helps us then form the view of what the right move is to make. But it starts early and it ends late. That's about the only consistency day to day.
And for those of us in the room, myself included, that want to have a voice or be involved, how are you working with us, those of us in this room who are kind of part of the private sector? And do you have any recommendations for us in that regard?
Well, like I said, I think Bo did a great job of establishing a lot of those relationships. So I'm blessed to be able to just inherit them, many of them from him. I think, I remember telling him initially he didn't have an EA, anyone to help with his calendar. I think he took like 250 meetings, in the first few weeks on the job. I'm like, that's insane. Like, I don't even know how you did that. It's not going to be that kind of, pace. A lot of those were introductory ones, but I'm grateful to be able to inherit a lot of those relationships and kind of pick up right where they left off. So for anyone that I haven't had a chance to sit down with and talk with, our door is always open. We're always eager to take a meeting, hear about what you're building, hear about any issues that maybe we have blind spots to, because we're only as good as the information that we're getting from industry. Our decisions need to be informed by the people who are going to be affected by the decisions that we make.
Is there any particular area of digital assets, let's set aside Bitcoin. I think if you're in this room, chances are you're a pretty big believer in Bitcoin. Are there other areas that you in particular are excited about? I don't know. Moving major asset classes on chain and creating efficiency there, stable coins, smart contracts generally, AI, NFTs, I don't know, whatever. Is there anything you're like, oh yeah, that's really cool?
All the above, right? There's so many different things here that we can, push on or pursue. We have to prioritize, right? We have limited bandwidth and limited political capital, so we're doing that prioritization, based on the president's leadership and David's leadership. I would say, the implementation of Genius and kind of the, what I think is going to be the explosive growth of stable coins, dollar-backed stable coins is very exciting to me, and that's something that we're working with Treasury mainly to do the implementation of. Tokenization of real-world assets is going to be a massive market. And then you mentioned, we talked a little bit about earlier, the combination of what's happening in the AI space with blockchain technology is going to be pretty incredible. I think there's all sorts of ways that we can take that rich environment of data that exists on the blockchain, couple that with, agentic, type AI functions, and there's going to be countless use cases for real-world applications.
I feel really smart because you're a Yale guy, and my answer would have been the exact same. Truly, those three are the ones that get me excited. But don't get me wrong. I love frog coins and digital monkey drawings as much as the next person, but I had a moment in late 2021 when people were going to jail and everything was about frog coins, where I'm like, what am I doing here? And now it's about everything you just described, stablecoins, moving markets onto blockchains and the intersection of AI and crypto. And holy crap, I feel invigorated and I feel mission and I feel lucky that we have an administration and people like you that are embracing it so that we at Bullish and our colleagues and our competitors and our friends in the room can do the same. So on behalf of everyone here, thanks for coming, spending time here. We know how busy you are. This is your first public appearance, I believe, live public appearance in the gig. So much appreciated and great job.
Thank you very much.
That brings our live coverage of CoinDesk's regulatory and policy event from Washington, D.C. to a close. It has been an incredible day of discussions, bringing together key policymakers, regulators, and the private sector to chart the course for the future of crypto. It was a pleasure bringing this programming to you. If you missed any of today's conversations, the full replay is available on demand on CoinDesk's X and YouTube accounts. I'm Jen Sanasi. If you enjoyed today's dialogue, I invite you to continue the conversation on my show, Crypto Policy and Regulation, that's co-hosted by Renato Mariotti. We are live every other Thursday at 12 p.m. Eastern Time. Thanks again for joining, and we'll see you next time on CoinDesk.com.